In Q1FY22, Infosys number beats consensus estimates where the company records its highest quarterly growth in a decade with revenue growth of close to 17% on a YOY basis and almost 5% growth on a quarter-on-quarter basis in constant currency terms. But what brought more cheer was when the management upped its revenue guidance for FY22 to 14 to 15% versus its earlier guidance of 12 to 14% for the current financial year. Also, the management highlighted that the large deal flows remain strong as of now and they have maintained their margin guidance for the current running year for 22 to 24%. But post this, we see that the brokerages have come up with a mixed commentary on the stock. They are sounding very confident on the long-term growth story for the company but are wary of the EBIT margin pressure in the near term for Infosys. Firstly, let's take up what CLSA has to say. Then CLSA maintained its buy rating on the stock with a target price of 1900 per share. Infosys has reported a sharp rebound in the revenue growth which was above what CLSA was working with. They highlight that the rising fulfillment costs mar an otherwise buoyant outlook for the company. Concurrent higher and expected upgrade in the FY22 revenue growth indicates a strong and a strength of the underlying demand drivers. On account of the lower than estimate Q1 FY22 margins as of now, what the company reported, they have cut their FY22 EPS estimate by just 2%, but their FY23 and 24 EPS estimates remains broadly unchanged. They also Infosys also remains their preferred pick, and that is because the dual themes of the growing digital spending and market share gain that's being witnessed by the company. Same is the case with Bank of America Merrill Lynch, where the brokerage firm maintained its buy rating on the stock with its target price of 1790 rupees per share. The brokerage firm reiterated buy on the expectation of the stronger growth than industry, led by increased win rate per participation in large deal wins. Also, the growth this time was led by retail and communication verticals, while the energy and the utility remain soft. They feel that the talent market weighing down near-term margins and the attrition and the associated cost pressure is likely to be a challenge in the forthcoming quarter. But now let's see what Nomura has to say. Then they too reaffirm buy rating on the stock while raising their target price to 1810 rupees per share. Nomura says that Infosys is their preferred pick as of now, and they say that it has the potential to showcase industry-leading growth going ahead as well. But if we talk about the EBIT margins, then that could be a potential dampener in the near term. But they see that a potential, they see limited potential for the stock to move ahead in the near term. But if we talk about the longer term prospects, then most of the growth drivers are working well for the company. So that's what the Infosys commentary from the brokerages on the stock post Q1 FY22 results.